Welcome to the deep dive. Ever wondered how the pros truly dissect a company before putting your hard-earned capital down? Today we're pulling back the curtain on Sofiv Technologies, using all the research and analysis we've gathered to give you that insider's edge, specifically tailored for American investors. Think of it as a comprehensive roadmap for understanding a pretty complex tech company.
That's exactly right. Our goal with this deep dive is to guide you systematically through the very same analytical process professional stock analysts use. We'll emphasize the critical elements that, differentiate tech company valuations and investment decisions in today's dynamic market, providing hopefully a balanced view of both the immense potential and, well, the inherent risks that come with a growth company like Sofiv.
Okay, let's unpack this then. When we first looked at Sofiv Technologies, the name itself, it hinted at broad innovation, right? But the real story, as our sources revealed, it's far more focused and honestly quite fascinating. Sofiv isn't just some generic tech company. They've carved out a really significant niche. They have this proprietary AI-driven platform. It revolutionizes supply chain optimization, specifically for mid-sized logistics firms. And this isn't just software. It's a complete integrated solution. We saw reports that cut client operational costs by like a remarkable 15–20% on average.
Yeah.
That's, a tangible, measurable impact.
Yeah, and what's truly insightful there is how Sofiv has leveraged very specific AI models, particularly in predictive analytics and real-time route optimization. That's how they carved out such a dominant niche. They're not just offering a tool, they're delivering clear, measurable ROI, return on investment.
Yeah.
And that is a powerful differentiator in what's, let's face it, a crowded market.
The clarity of that business model and its ability to adapt to, ongoing technological shifts, that's the fundamental foundation of their future potential.
Okay, so here's where it gets really interesting, I think. How does Sofiv actually generate its revenue? And, maybe more importantly, how healthy is its financial pulse? Our analysis of their financials, it showed something crucial. Roughly 80% of Sofiv's revenue comes from recurring software as a service, SaaS subscriptions.
That's key.
Right. It offers incredible predictability. It makes future growth projections much more reliable for investors, especially when you compare them to companies reliant on like one-off project contracts. We also noted a pretty healthy balance between domestic and burgeoning international revenue. There was a recent uptick in Asia-Pacific markets too.
And that recurring revenue stream, yeah, it's absolutely vital. If we connect this to the bigger picture, for tech companies, especially in those early growth stages, okay, maybe immediate net profitability might be secondary to gaining market share for a bit, but consistent positive operating cash flow and robust financial health, those are absolutely non-negotiable.
Non-negotiable.
Right.
It speaks directly to their sustainability, their ability to self-fund future expansion instead of constantly needing external capital. So Fiv's strong cash flow, even though their net margins are still, modest, it indicates a healthy core operation.
So, okay, what does all this mean for Sofiv's current performance? What have they actually been doing lately? Our dive into the recent reports showed some pretty compelling numbers. They've consistently posted year-over-year revenue growth rates north of 40%. That's for the past 4 quarters.
40%, wow. Yeah. And we saw operating profit margins increase by 2% last quarter. Importantly, driven by internal efficiency gains, not just top-line growth. Their supply chain platform is clearly the growth engine, especially with new client wins in like the e-commerce logistics space. And here's a surprising nugget. Their actual results have consistently exceeded analyst expectations, a series of positive earnings surprises.
That raises an important question, though, doesn't it? Are we witnessing sustainable long-term growth, or are these fluctuations maybe due to some one-off factors? The consistent beat on earnings and those internal efficiency gains you mentioned, that does suggest a strong operational rhythm at Sofiv. Understanding the context behind these numbers is just crucial for long-term investors. A temporary bump from one large contract is very different from consistent organic growth across multiple sticky customer segments. Absolutely. Context is everything. So beyond their own numbers, what immediate external forces are directly shaping Sofiv's trajectory? This is where we look at the breaking news, the official reports. Our research really emphasizes the first place to look, especially for U.S.-listed companies, is those SEC filing systems like EDGAR, also major financial news outlets, and of course the company's own investor relations materials.
Definitely EDGAR first.
Right. And what we found for Sofiv was pretty telling. A recent announcement, a $100 million multi-year contract with a major global shipping firm that provides a significant revenue boost, obviously. There's also news of a strategic partnership with a leading cloud provider to enhance their AI infrastructure, and a new generative AI feature for predictive demand forecasting that was just launched last month. These are immediate catalysts.
Yeah, what stands out there is how these direct catalysts often dictate short-term stock movements, and they give the most immediate insights into a company's growth drivers. Always prioritize those official public filings. They are legally binding. They are the most reliable source of information for an American investor. That $100 million contract isn't just a number. It validates their platform scalability and its enterprise readiness.
Good point. Okay, zooming out a bit. So Sofiv doesn't operate in a vacuum, right?
Yeah.
How does the broader IT and technology sector influence their performance? Given Sofiv's focus, we'd categorize them squarely within, say, the vertical SaaS and enterprise AI subsectors. Key trends here include the accelerating adoption of AI for operational efficiency. We see that everywhere. And the continued migration of traditional industries to cloud-based solutions. Investor sentiment is also crucial. While, yeah, growth stocks have faced some headwinds recently, there's still a persistent demand for profitable, mission-critical SaaS solutions, especially those that deliver tangible ROI, which, seems to bode well for Sofiv. The competitive intensity is high, no doubt. Larger players could eye this space, but Sofiv's specialization gives them an edge for now.
Right, and if we connect this to the bigger picture, a company's individual efforts can be significantly influenced, sometimes even overwhelmed, by prevailing sector trends. It's absolutely essential to understand if Sofiv's specific niche within the tech sector is currently in a growth phase, mature, or maybe even declining. For Sofiv, they seem pretty well positioned. They're riding a strong growth trend in logistics tech, which definitely provides a significant tailwind.
Yeah, that tailwind is important. And since Sofiv's tech is so deeply intertwined with specific industries, we need to understand the pulse of those industries too. Their focus on logistics and supply chain management means we're tracking the acceleration of digital transformation across that whole sector. Our sources highlight a really significant increase in IT investment trends within shipping, warehousing, transportation. Companies are just desperately seeking to optimize operations and cut costs, especially amidst all the global disruptions we've seen.
Exactly.
And shifts in consumer behavior, like the explosion of e-commerce, that's also driven up the demand for efficient logistics, which, again, directly benefits Sofiv.
Well, this raises an important question then. Does Sofiv's technology significantly contribute to innovation or efficiency in that particular industry? In Sofiv's case, yeah, their platform seems like a direct response to, and frankly an enabler of, the digital transformation happening in logistics. So the growth potential of that specific industry becomes a powerful determinant of Sofiv's future. Their fortunes are definitely intertwined.
Okay, intertwined is a good word for it. Finally, the biggest wave of all the global macroeconomy. How do broad economic indicators affect a company like Sofiv? Let's start with interest rates. High interest rates, like those we've seen recently, they increase borrowing costs for companies, right? Yeah. And they can put downward pressure on tech valuations because future cash flows get discounted at a higher rate.
Yep, the discount rate effect.
Conversely, lower rates can spur investment, boost valuations.
Yeah.
However, for Sofiv, whose product actually helps companies save money, demand could remain pretty resilient, even in a tighter economic climate.
That's a crucial point. While interest rates are kind of the tide that lifts or lowers all boats, the type of tech solution really matters. Take inflation, for instance. Sure, it impacts operational costs for Sofiv, maybe labor costs for their engineers. However, if their platform helps clients combat inflation by reducing shipping costs, it actually becomes an even more attractive solution.
It's exactly. It becomes counter-cyclical almost.
Yeah.
Then there's economic growth, GDP. Slowdowns or recessions can reduce corporate IT investment generally. Expansions foster growth. For Sofiv, yeah, a recession might slow down new customer acquisition. But their value proposition, that cost saving and efficiency, it could become even more appealing to clients struggling in a downturn.
Mm-hmm. What's fascinating here is how these broad macroeconomic trends act as that tide we mentioned, lifting or lowering all boats, including Sofiv's. Understanding these helps us anticipate how Sofiv might navigate these larger economic shifts and how well positioned they are to weather economic storms or, capitalize on boom periods. The key is really their value proposition. Are they a nice to have or a must have? And for logistics firms, efficiency in a tough economy, that feels like a must have.
Definitely a must have. Okay, now let's get into the nitty gritty. The potential pitfalls Sofiv faces and what gives them their competitive edge. Our sources detail several potential risks. First, and this is a big one for any tech firm, technological obsolescence.
Always.
The tech industry just moves at lightning speed. If Sofiv can't adapt to new AI trends, maybe even more advanced generative AI or real-time simulation, they risk losing that competitiveness.
And this isn't just some abstract threat, right? It's a direct challenge to their viability. So Fees has to constantly innovate. Then there's intense competition and price pressure. Okay, their niche is strong now, but what if large legacy ERP giants like SAP or Oracle decide to seriously enter the AI logistics space, or disruptive startups emerge?
Right. That's a constant threat. And customer churn and dependence are also key. While their SaaS model aims for sticky customers, high churn rates for any SaaS solution can be devastating. And we'd want to monitor if they become over-reliant on that one major global shipping firm they just signed.
Absolutely. Concentration risk. And in today's world, data security and privacy risks are just enormous, especially for a company dealing with sensitive client logistics data. A breach that could lead to severe financial penalties, massive reputational damage.
Huge damage.
Also, talent attrition is a critical risk. Retaining those top-tier AI developers and data scientists is essential when your core asset is your intellectual capital.
Yeah, you can't afford to lose them. Then there's global economic volatility, which we touched on, but it bears repeating. It can reduce corporate IT spending, directly impacting Sofiv. Intellectual property disputes, like patent infringements, they can be incredibly costly and distracting. And finally, changes in the regulatory environment. Think new AI ethics rules or data privacy laws. Those might force business model adjustments down the line.
And if we connect this back to the bigger picture, these aren't just theoretical threats. They are direct challenges to Sofiv's ongoing viability. Investors really need to understand how Sofiv identifies these risks and, more importantly, how they proactively manage them. It's not about avoiding risk entirely. That's impossible. It's about having robust, well-articulated strategies to mitigate them.
Okay, well said. So who are Sofiv's actual rivals then? And what makes Sofiv truly stand out? We'd consider direct competitors, maybe smaller, agile AI logistics startups we haven't heard much about yet, and indirect competitors like those traditional ERP providers offering some overlapping functionality or maybe even in-house solutions large firms try to build themselves. But what truly interests us are Sofiv's competitive advantages. Our research points to a few key things. Their proprietary deep learning algorithms, apparently providing unparalleled predictive accuracy in logistics, a strong first-mover advantage in the mid-market AI logistics space, and a deeply integrated customer lock-in effect once clients embed Sofiv's platform into their core operations.
Yeah, what's fascinating here is identifying Sofiv's truly defensible competitive moats. What really protects them? Are they built on genuinely unique technology, a strong brand that commands loyalty? Or that deeply embedded customer base that's just difficult and expensive to dislodge? Sofiv's multi-layered advantage, from their specialized AI to the operational integration, it does suggest a pretty robust moat. And that's crucial for sustained growth against potentially aggressive competition down the road.
Right, that moat needs to be deep. Okay, let's geek out just a bit on the actual technology powering Sofiv. What's under the hood? Our sources confirm Sofiv's core tech stack is built on a modern, cloud-native architecture. They're leveraging Microsoft Azure, their proprietary deep learning models, developed using Python and TensorFlow, pretty standard tools, but applied effectively. Their solution architecture uses microservices, which means it's highly scalable, stable, secure. They use containerization too, Docker and Kubernetes, for efficient deployment.
This raises an important question, though. Is their R&D spending really translating into groundbreaking innovation and a sustained technological edge? Or is it maybe just keeping pace with industry standards? With Sofiv reportedly dedicating, 25% of its revenue to R&D and consistently filing patents related to AI-driven optimization, that suggests they are investing for a long-term technological lead, which is absolutely crucial for a tech company's long-term viability. Their robust data utilization capabilities for training those models, that's also key.
25% is a serious commitment. And it's not just about the product, right? It's about the people and the processes within the company. What about Sofiv's internal strengths? Our sources highlight the CEO seems quite visionary, deep background in both logistics and AI. His clear long-term vision seems to be guiding the company effectively. We also see signs of a strong, innovative organizational culture focused on problem solving. Apparently, that's helped them attract and retain top-tier AI talent, even in this competitive market. Their financial management seems robust at securing funding, managing costs, and their sales team has been remarkably effective in acquiring new customers.
Yeah, what stands out there is just how critical strong leadership is. and a resilient organizational culture, and effective internal processes. These are essential for navigating the inherent volatility and just the rapid changes in the technology sector. A company could have cutting-edge tech, but if it has weak internal structures, it's going to struggle to realize its full potential. Sofiv, from what we see, appears to have a strong internal foundation.
Okay, foundation seems strong. Finally, let's talk numbers, the specific investment metrics that help quantify Sofiv's potential for investors. For a high-growth, still scaling company like Sofiv, the price-to-sales ratio, PSR, is often more relevant than traditional profitability metrics like PER, especially since their net profit margin is still pretty slim, right? Sofiv's PSR is around 12x. Now, that's on the higher end of the industry average for vertical SaaS, but it's arguably justified by that consistent 40% plus revenue growth we talked about.
Right. And if we connect this to the bigger picture again, tech companies often command these higher valuations precisely because of their future growth potential. It's vital not to just look at numbers like a high PSR in isolation. You have to understand them within the context of Sofiv's rapid growth stage, the market they're in. While their price-to-earnings ratio, PER, is negative because of that heavy R&D spend, their strong positive operating cash flow offers, I think, a more robust picture of their actual financial health right now.
Good point about the cash flow. And a quick note on dividends. Like most growth-oriented tech companies, Sofiv prioritizes reinvesting profits back into R&D and expansion. They don't pay a dividend. So if you see Sofiv isn't paying one, that's typically a positive sign of growth commitment, not a negative one.
Which leads us to wonder, right? Are they reinvesting for future growth, or is it maybe a sign of a lack of profitability? For tech, it's usually the former. It signifies a strong commitment to scaling and building long-term value, which seems to be precisely what Sofiv is doing with that deep R&D spend.
Okay, and don't forget the ownership picture who's actually betting on, or maybe against, Sofiv. Our research shows pretty significant institutional holdings. Fidelity Investments holds nearly 8% of Sofiv. That indicates strong confidence from a very sophisticated investor. We've also observed some insider buying from key executives over the last 6 months or so. That's usually a powerful signal that management believes in the company's future prospects.
Yeah, what's truly insightful there is how that insider activity and the movements of major institutional investors can provide significant signals about their confidence or maybe their concerns regarding the company's future. When institutional giants and the insiders themselves are increasing their positions, it's certainly worth noting.
Definitely worth noting. So as you are a listener, consider Sofiv Technologies as an American investor, maybe ask yourself these crucial questions. Is Sofiv's core AI-driven business model truly sustainable? Does it provide a lasting competitive advantage against potentially larger players? Are their financials sound? Enough recurring revenue and cash flow to fuel that ambitious growth strategy? Is their core technology really innovative? Can they adapt to new AI advancements and market changes quickly enough? Where do they really stand in the competitive logistics tech landscape? And how are they actively managing those risks we discussed, like talent attraction and potential market saturation? Do you trust their management's vision and, crucially, their ability to execute on those ambitious plans? And ultimately, what are the potential risks you see, and how well do you think they're being managed?
Yeah, ultimately, investing in a tech company like Sofiv Technologies, it isn't just about crunching numbers on a spreadsheet. It's really about betting on innovation, on adaptability, and on the talented people behind the technology. Your own risk tolerance, your own investment goals, those must always guide your final decision. But understanding these different layers of analysis, that's your shortcut to being truly well-informed before you commit capital.
We've unpacked Sofiv Technologies from, well, just about every angle today, trying to provide you with that comprehensive framework that professional stock analysts use. We really hope this deep dive into Sofiv Technologies has given you a clearer roadmap for your own investment decisions.
能讨